Good morning, Merry Christmas, and welcome to In the Loop Weekend Ag Talk, brought to you by Alphen Insurance Agency. We hope you're having a great weekend. Kick back, relaxing, and enjoying some time with your family and celebrating this awesome time of year. Let's jump into the markets and look at where things closed on Thursday, as we were off on Friday, and I do not have any Friday markets at the time of this recording. There's plenty of holiday cheer in the air as Christmas draws near, but that optimism didn't make it to the grain markets on Thursday afternoon after bearish sentiment kicked most commodity prices lower. March closed out Thursday at 660 on corn. March wheat closed at 762. March cotton closed at 84.30 with December 23 cotton at 81.07. Cotton is the only shining star of the week, really, when you look at increases there. Had one day close to limit up. January soybeans closed out Thursday at 14.67. When we look at North Carolina ag highlights, don't forget to join everyone at the annual North Carolina Commodities Conference on January 12th and 13th at the Sheraton Imperial Hotel and Convention Center over in Durham. Limited rooms for hotels, so be sure and go to the Commodities Conference website now and get your room booked. The North Carolina Department of Agriculture is planning a series of risk management workshops on managing price volatility and identifying macro indicators. There's no charge for these workshops, and topics will include grain hedging, basis trading, cost of carry, ICE cotton futures, option trading on futures, energy derivatives, and macro forces impacting the hedger. There's 8 of these workshops planned in Lumberton, Washington, Elizabeth City, Roxborough, Oxford, Jackson, Salisbury, and Albemarle. More can be found about this on the NCDA and CS website. With diesel prices as high as they are, how can farmers protect themselves against that cost? Jason Swantz is the Senior Vice President of Refined Fuels at CHS Incorporated. He says farmers should be looking into forwarding contracts. Also, he said winter's usually the least demand for diesel fuels and the best time to fill up. He thinks prices will go down, but he says that the U.S. still needs to increase refining capacity to keep up with the demand during peak seasons. U.S. energy stocks increased across the board, with ethanol pulling back from very strong output the week before, coming in at 4.6 million gallons lower than just under 320 million gallons. It was another solid week for increasing U.S. ag export sales. Corn, soybeans, and wheat all exceeded pre-report trader expectations. Soybean volumes were the second highest of the marketing year. The National Oilseed Processors Association reported their members crushed 179.2 million soybean bushels in November, a bearish number to the soybean complex as it fell below trade expectations. The soybean oil stocks value was also bearish. And there's also concern this weekend with the extreme cold blast hitting the U.S., especially in the wheat belt of the United States. Expectations are that this could affect, damage, or even kill off 20 to a maximum of 30% of the winter wheat acreage. Let's keep an eye on this over the weekend and in the coming weeks and see how the markets react to this. As we jump into the next section, this week we're going to do something to consider and talk about the true cost of equipment ownership. This week I listened to a podcast with Chris Barron of AgView Solutions as he was discussing true cost of equipment ownership. Equipment line on budgets is very important. Equipment is the number 2 capital expenditure behind land ownership, and for many of us in my area, that rent land is the number 1 line on their budgets. We don't tend to look at interest or depreciation when we do budgets because you don't write a check for it every year. We only write a check for interest and depreciation when it comes trading time. Speaking of inflation, when you look at it, it's up roughly 30% over the last 3 years when we look at equipment cost, up around 14% between 21 and 22. However, we're very fortunate because used equipment values actually appreciated during this time, depending on the model and the location you were in. Chris at AgView Solutions requests and encourages everyone to get their local equipment dealers to do an appraisal every year of their equipment to get a true value. He says when you call your dealership and ask them to come out to do an appraisal, tell them not to give a blown up value, to give a value that they'd be willing to write a check for if you drove the equipment up on the yard at that time. That'll give you a true real number of the value of your equipment. Then you can know exactly what depreciation is on that piece of equipment and if and when it'll be time to trade. Something between your tax preparer, your CPA. A lot of times tax balance sheets and true market values depreciate at different rates, and having these appraisals will get true numbers for your CPA to use when they're doing your taxes and for you to use when you're doing your budgets on cost of ownership. Knowing your equipment cost per acre and your cost per bushel, like you do for all of your other inputs like fertilizer and chemicals, is extremely important. If you don't know your true cost, you can't tell your true profit margins. Marketing of your crop includes your cost as well as your selling price to get your true gross margin that you make. In this example here, we look at a purchase price of a piece of equipment. We can say it's a tractor or a sprayer. Say you purchase something for $400,000 that you plan on keeping for 5 years and then trading in for a salvage value of $200,000. When you look at the replacement value of that, considering the inflation I was talking about a while ago, the replacement value of a like piece of equipment would be $532,000 roughly. So when you look at inflation replacement cost, that is your replacement cost minus your purchase price. In this example here, it would be the replacement cost of $532,000 minus $400,000 for the original purchase price for a sum of $132,000 divided over 5 years. That's $26,400 a year you need to account for. When you look at depreciation cost, that's the initial $400,000 value minus the $200,000 salvage value divided out over 5 years is $40,000 a year. When you add these two together, that's $66,400 that many times we would not account for in the true cost of ownership there. We'll say this was a tillage tractor that was used on a 2,000-acre farm, 4 passes a year for 5 years. That roughly gives you about 8,000 acres per year this tractor goes over, times 5 years, 40,000 acres. When you take that inflation and depreciation and divide it over that, that's about $8.30 an acre, the cost to own. Plus, you would add in fuel, maintenance for your oil, filter, tires, and all those things to get across your ground. So that easily could be $10 to $12 per acre ownership there, and that's just on one piece of equipment. That's not including maybe your planting tractor, your planter, your sprayer, your combine, and all the other pieces of equipment involved in your operation. If you need help looking at budgets this year, give us a call. We'll be glad to sit down and work with you to help you create an actual budget that is closer to reality so you can recognize what your true profit margin is in your operation. And from here, we're going to say goodbye and Merry Christmas again. We hope you have a great weekend and Christmas holiday with your families. We want to say thank you again to all the farmers who help feed and clothe the world. Don't forget to like us, follow us on Facebook, look us up on YouTube at Alphen Insurance Agency. Tell your friends about us, help get the word around so we can grow this channel here. And remember, make mental health a priority at your home and at your farm. Make time for yourself, make time for those around you, and give us a call. We'll come to you so you guys can focus on family and farming. Have a great Christmas, and we'll be talking to you next week.